created opportunity for people to want to sell because they're like, well, I don't know, maybe I can get back something instead of nothing if I sell.
Let's bring on our co-host here, Garrett Lynch. What's going on?
What's going on, Michael?
So love to get a quick update from you, Garrett. I mean, we and our team are constantly underwriting deals and we're making offers, dealing with issues around asset management, raising capital, things of that nature. What are you seeing right now in the market?
Yeah, so at this point in time, interest rates are at their peak. We were hoping that they would flatten out. We didn't expect that they were going to go down, but at least flatten for a minute. And although the Fed paused, you typically see the interest rate hikes before they announce it. So shortly after the last meeting, when they said they were pausing interest rates, they actually did rise behind the scenes. And what that creates is a larger gap between where you can refinance out of a deal that you have on a loan, if you have like a short-term loan, and where that loan sits. So that gap has just widened even further. And so it's created opportunity for people to want to sell because they're like, well, I don't know, maybe I can get back something instead of nothing if I sell at this point. But values continue to drop when this happens. And so you're seeing a lot of that going on. Now we're starting to see some actual panic sellers hit the markets versus before there weren't too many of them. There's a lot more now, and there'll be even more probably next year. So kind of a crazy time. Some people are comparing it to the Big Short or what happened in 2007, 2008 in single family, but you're not seeing a big ripple effect like this in single family. You are seeing it in commercial. So it's wild times right now. I mean, I'd say things have slid as pricing has slid so quickly over the last year. It's been difficult to nail down a deal because there's just that gap has been so wide as to what you can pay and what people are willing to take. And now that's starting to tighten up, which is good for anyone that's looking to buy.
With multifamily investors, it is a wild time, like you said, because on the one hand, we're discussing about how to deal with the rising interest rates, expiring interest rate caps on existing portfolios. So if you're owning existing multifamily assets, or really any, there's also ground-up developers that are affected the same thing, really trying to deal with that. So it's a real issue if you have real estate. Now, a good number of you listening and watching this don't have any kind of commercial real estate. So for you, it's complete upside. For us who have multifamily assets, we're trying to play defense while playing offense. And like you said, we're already starting to see some distressed assets. We're aware of an operator in our space who's got over a dozen properties listed and a lot of them under the loan balance. And I think a short sale is going to become a real thing. And that's what's happening. I know a couple of other operators I know who are bidding on those things, and it does require a short sale / loan modification as a part of that sale. So that's what's happening as well. We're starting to pick up some deals as well. And I think you're going to see more and more of that. So I think for existing operators, it's going to be a challenging time trying to navigate existing assets that we have. And then at the same time, trying to take advantage of new opportunity that's coming up as well. So it's going to be a little bit wild ride. In general, from an opportunity, Garrett, would you say there's going to be a buying opportunity coming up, or is it something that people should maybe stay away from a little while?
No, it's going to be a significant buying opportunity coming up. Now, the thing that's going to dictate who's buying is who's got the capital, right? So right now, there's a lot of people getting burned everywhere. So you're either you invested in a deal, or there's even institutional entities that are getting burned because of what's happening in the markets. So they may be a little skittish to deploy new capital. But if you have someone that understands what's happening and they're willing to jump back into the market when it's down, that's really where the value is going to be. But there's going to be a ton of great deals around the corner. This is really one of the most exciting times to be buying real estate. If you can fathom what maybe you're losing by getting from the deals that you got into in the last couple of years.
I think I'm sensing this is going to be an opportunity. Right in 2009 was right after the recession. There's going to be a huge buying opportunity. But like you said, the challenge is going to be not just pulling the trigger yourself as operators dealing with some distress, but also convincing investors, limited partners, to invest when they've been affected by losses or capital calls and so on. But this is when Warren Buffett buys. This is where he makes his billions, right? And so now will be a really good time if you're not already in the game to kind of get educated and learn about the space and really be talking to the brokers. Because if you don't talk to the brokers right now, you're going to miss this opportunity. By the time it lands on LoopNet or in the news, the market will be red hot again. You'll miss the entire previous market. So really get into the space and start educating yourself, start calling brokers so you can take advantage of what's about to come.